$5 trillion. That's the historic market valuation recently achieved by Nvidia, the company at the heart of the AI revolution. This isn't just a business success story. It's a financial phenomenon built on the promise of artificial intelligence. But what if this massive number doesn't represent substantial value? What if it's more than a bubble? What if it's a flashing red light for a fundamentally broken economic system that is driving wealth inequality? The problem starts with the metric itself, market capitalization. It's the total price of all a company's shares. It's simply what the market is willing to pay right now. Market cap is often confused with a company's real worth based on assets, debt, and the actual cash flow it's expected to generate. But the current AI boom has blown this gap wide open. Nvidia trades at a price-to-earning ratio that echoes the dot-com bubble era. Investors aren't valuing current profits. They're buying into a speculative fantasy about a limitless future. In some cases, the demand is even circular. Nvidia invests billions in its own customers, who then use that money to buy more Nvidia chips, creating astronomical revenue figures that look less like a traditional business and more like late cycle financial engineering. A $5 trillion valuation creates wealth, but it creates it with less precision. This explosive growth is a powerful engine of extreme inequality. The wealth is concentrated among a tiny fraction: executives, early investors, and full-time employees with massive stock options. Reports show a significant majority of Nvidia's employees are now millionaires. This is a life-changing windfall for the few who had the right piece of paper at the right time. Meanwhile, the countless people who make the AI world possible, the gig workers who label data, the contract workers who staff the corporate offices, the miners who extract the raw materials, they have no equity. They see none of the capital gains. Their pay remains flat, their job remains precarious, and the cost of living around these mega companies skyrockets. Wealth concentration further distorts our entire economy. The soaring stock price pulls up the entire market, making it look healthy while simultaneously making housing, healthcare, and education unaffordable for the rest of us. It's a wealth pump aggressively accelerating the divide between the capital owners and everyone else. Nvidia's $5 trillion valuation is a symptom of a deeper crisis. Our system is designed to reward financial speculation and concentration of power, not the creation of broad society value. This isn't just a tech bubble that will pop. It's a fundamental flaw in how we define corporate success. Nvidia's market cap of $5 trillion is 3.6% of the entire world's GDP. At $5 trillion, the entire world's GDP is $111 trillion. Let that sink in as we think about how we define true success. True value shouldn't be a number on a stock ticker. It should be measured by a company's impact on human well-being, stable jobs, and a healthy planet. Until we demand a metric that reflects true societal value, we will continue to confuse a financial illusion with real progress. And the inequality engine will only run faster.